Namaskar to all the taxpayers, Aykar Parivar, and stakeholders of the Income Tax Department. As we commence the new financial year 23-24, the Income Tax Department rededicates itself to achieve even greater heights through its ideals of efficient and effective administration and increased voluntary compliance. In financial year 22-23, the focus of the department has been primarily on better taxpayer services and voluntary compliance through enhanced use of technology. Our taxpayers have been an integral part of the journey and have always shown their unflinching support for and repose their trust in the department. I take this opportunity to compliment and thank all officers and officials of the entire Aykar Parivar who have tirelessly worked to accomplish their duties and help the department achieve transformational growth. Let us together look at the transformational journey we have had this year, which was aimed at making tax compliance easier for our taxpayers. All our efforts were made to increase revenue collection in line with the target set for the year 22-23. Regular monitoring of revenue collection by field formations, putting in place new initiatives for ease of compliance, and increased use of technology has resulted in steady growth of direct tax collection. The direct tax collection net of refunds was at 16.61 lakh crore, which was higher by 17.63% over the net collections of the financial year 21-22. This exceeded the budget estimates by about 17% and the revised estimates by about 0.69%, despite higher outgo of refunds of over 37.5% compared to the preceding year. The gross collections at 19.68 lakh crore was 20.34% higher as compared to the gross collections in financial year 21-22. I again compliment the officers and staff of the department for working hard to make it possible. Every effort was also made to ensure a smooth operation of the income tax portal, which resulted in record number of e-filing of returns. For the first time in the last 8 years, the date for filing return of income returns was not extended. In the financial year 22-23, 7.78 crore ITRs were filed up to 31st March 2023. This is an increase of about 6.5% from financial year 21-22. For assessment year 22-23, more than 7.51 crore ITRs were filed till the last date of filing, that is 31st December 22, out of which there were about 7.28 crore unique taxpayers. The filing of ITRs in the new e-filing portal peaked on 31st July 22 with over 72.42 lakh returns being filed on that day itself, which has been a record in itself. Not only we have focused on seamless filing of return, we have also expedited the processing of returns and quicker issue of refunds. The average time taken for processing of returns has been reduced to only 16 days in financial year 22-23 as against 26 days in the previous financial year, that is 21-22. We have seen a 100% increase in the total percentage of ITRs processed within 1 day of their filing. This percentage has increased from 21% for assessment year 21-22 to 42% for assessment year 22-23. We achieved a peak processing capacity of nearly 22.94 lakh returns in a single day on 28th July 22. Rectification requests have also been reduced to 0.1% of the total returns processed, and average time of rectification disposal is now only 9 days. Further, the average time in issuance of refunds has significantly brought down. This year, 80% of the refunds were issued in first 30 days of the filing of return as against 60% in the preceding year. The speedy processing of returns of income resulted in speedy issue of refunds. This aspect of quick issue of refunds was also highlighted and appreciated by Honorable President of India, Srimati Draupadi Murmu, in her budget address in January 2023. It's a matter of pride that Honorable FM also highlighted these milestones in her budget speech on 1st February 2023. These areas of works have also been appreciated across the board by taxpayers and stakeholders alike. All these strengthen our resolve to continue to enhance the ease of compliance and ease of doing business for our taxpayers. To increase ease of voluntary compliance and to reduce litigation, updated return functionality was enabled, facilitating the taxpayer to be able to update his or her return anytime within 2 years from the end of the relevant assessment year. As on 31st March 2023, more than 24.50 lakh updated returns have been filed and approximately rupees 2,480 crores has been collected as additional tax. The e-verification scheme 2021, which was initiated in September 22, was made fully operational. Information of financial transactions pertaining to financial year 2019-20 was taken up for e-verification. Limited instances of high-value transactions which were not fully disclosed in the returns of income were selected for such verification. Taxpayers are now getting additional opportunity to correct the information if it is wrongly reported and make good any shortfall in paid taxes, as they can file an updated return under section 139(8) capital A. During the year, e-verification in about 68,000 cases was taken up on pilot basis, and taxpayers have been facilitated to rectify mismatches and encouraged to file updated returns. New tax payment system TIN 2.0 was launched on the e-filing portal, which offers faster, efficient and safer payment of tax. TIN 2.0 provides faster turnaround for tax payments and reflects real-time status of tax payments and refunds. Till date, all 17 banks authorized to receive income tax payments have been successfully onboarded on the e-pay tax functionality on the TIN 2.0 platform of the e-filing portal. For enhanced taxpayer services and for facilitating ease of compliance, a mobile app titled AIS for Taxpayers was launched to help taxpayers view information available in the Annual Information Statement or Taxpayer Information Summary against their permanent account number. Keeping international best practices in mind, a common ITR form has been proposed as a common return form for all persons except trusts. The proposed ITR aims to bring ease of filing return and reduce the time for filing the return considerably. The proposed draft ITR was placed in public domain for suggestions and feedbacks. Work on the same is in progress. Faceless assessment is one of the biggest direct tax reforms in India based on key principles of efficiency, transparency and accountability. Till 31st March 2023, more than 4 lakh faceless assessments have been completed. One of the significant changes made is that the discretion of the faceless assessment unit in providing video conferencing facility has been removed to ensure adherence to the principles of natural justice in faceless assessment proceedings. A detailed SOP was issued in August 2022 for the purposes of better coordination and dissemination of information amongst the assessment unit, verification unit, review unit and technical unit. Extensive outreach programs have been undertaken through social media platforms and SMS campaigns to educate the taxpayers regarding the faceless processes. Continuous efforts have been made to analyze grievances arising out of issues pertaining to faceless assessment so as to identify the root cause and to address the problem areas. As a result, grievances related to faceless processes have reduced by 60% in financial year 22-23 as compared to the financial year 21-22. There is also an overall reduction in number of writ petitions pertaining to the faceless processes. In order to facilitate efficiency and effectiveness in litigation, faceless appeals was also introduced. More than 1 lakh appeals have been disposed of through faceless regime. Continuous efforts have been made to improve and further streamline the process of faceless appeals. The initial issue faced in video conferencing facility has been addressed and efforts have been made to make it more user friendly. Priority communication channel has been started for instant communication of expedient messages with CIT appeal units. A communication window between the CIT appeal units and the appellant has been introduced so as to facilitate the appellant for submissions even before the issue of initial notice from the Office of the CIT Appeals. Further, functionality for filing application under section 154 against orders of CIT Appeals has also been rolled out. I am happy to state that a record number of 95 advance pricing agreements have been entered into in financial year 22-23 with Indian taxpayers. This includes 63 unilateral APAs and 32 bilateral APAs. With this, the total number of APAs since inception of the APA program has gone up to 516. In fact, a record of the largest number of single day signings in the history of the APA program was also created with a total of 21 APAs signed on 24th March 2023. Pursuant to the scheme of advance rulings as amended by the Finance Act 2021, the Board for Advance Rulings have been made fully operational in March 2023. Moving on to the important legislative measures introduced in the last 1 year and taking forward the policy of litigation management, new provisions were brought to ensure that an identical question of law pending in appeal before the jurisdictional High Court or the Supreme Court in any case for filing of further appeal to the Appellate Tribunal or the jurisdictional High Court in the case of the SSE shall be deferred till such question of law is decided by the relevant court subject to certain conditions. To improve tax compliance and administration, a scheme for taxation of virtual digital assets or VDAs as are commonly called was introduced to bring clarity in taxation of VDA. Tax deduction at source at the rate of 1% has been provided on transfer of such VDAs. In order to provide a level playing field between cooperative societies and companies, the existing disparity in the rate of minimum alternate tax was also removed. The Finance Act 2023 continues the reform focused agenda in the direct tax administration through tax reliefs, removing difficulties faced by the taxpayers, and rationalization of various provisions. In the Finance Act 2023, a new tax regime has been introduced wherein the basic exemption limit has been revised to rupees 3 lakh, and for every additional 3 lakh of income, the next tax rate will be applicable. The highest tax slab of 30% shall continue to apply to income above rupees 15 lakh. Further, under the new tax regime, the highest surcharge rate of 37% on income above rupees 5 crore has been reduced to 25%. The new tax regime will serve as the default regime, and standard deduction from salary and deduction from family pension shall be extended to the employees who opt for the new tax regime. In order to promote timely payments to micro, small and medium enterprises, payments made to such enterprises have been included within the ambit of Section 43B of the Income Tax Act, and deductions for sum payable to such MSMEs shall be allowed only on payment basis. To improve ease of tax compliance and as a measure towards increasing tax base, the threshold limit for presumptive taxation schemes have been increased to rupees 3 crores under Section 44 AD for eligible businesses and rupees 75 lakh under Section 44 ADA for professionals, subject to the condition that at least 95% of the receipts and payments are made through digital means. There may be certain persons who are not required to furnish the return of income, and it is not the department's intention to include such persons in the category of non-filers. Hence, in order to provide relief from the higher rate of TDS or TCS in such cases, the definition of the specified person has been amended in sections 206AB and 206 CCA of the Act so as to exclude a person who is not required to file a return of income and are notified by the government. In order to promote the concept of electronic gold, the transformation of physical gold into electronic gold receipt and vice versa by a vault manager registered with SEBI shall not be considered as a transfer for the purposes of capital gains taxation. Relief has been provided to startups from applicability of Section 79 regarding setting off and carrying forward of losses, whereby eligible startups will be able to set off and carry forward their losses incurred during the first 10 years of incorporation. The previous time limit was 7 years. Further, to be eligible for tax deductions, the last date of incorporation for startups has been extended from 31st March 2023 to 31st March 2024. As part of socio-economic welfare measure, the threshold limit for TDS has been raised from rupees 1 crore to rupees 3 crore for recipients who are cooperative societies. New manufacturing cooperatives which commence manufacturing before 31st March 2024 have been extended a lower rate of tax of only 15%. Continuing the trend in the earlier Finance Acts, the provisions for charitable institutions and trusts have been further rationalized. Trusts or institutions that have not commenced activities can only apply for provisional registration under Section 1023C or Section 12AB of the Act. Trusts and institutions that have commenced activities at the time of their first application can now directly apply for approval under section 1023C or registration under section 12AB or section 80G of the Act. The department has been using technology in order to streamline its processes as also to create credible deterrence against tax evasion. The role of the department in identifying discrepancies in accounts of taxpayers and detecting tax evasion is critical. Credible deterrence is an essential prerequisite for the success of any voluntary compliance-based tax system. The department is using technology extensively to identify and detect tax evasion, which has given excellent results. In fact, the department is now using non-intrusive means for the purposes of deterrence. Some examples are the AIS and TIS statement, introduction of the e-verification scheme, and updated returns, whereby the information pertaining to financial transactions of the taxpayer are disclosed to him in a transparent manner, thereby encouraging him or her to pay taxes honestly and file the return of income correctly. This will only be further scaled up so as to deepen and widen our tax base. The future of the department is in enhanced use of technology and development of specialization by the officers. You may be aware that a process of data sharing is already in place between different departments and ministries. Now, with the PAN being declared as a unique identifier for several processes, our role is only going to deepen further. Therefore, it is very important that our officers keep updating and upskilling themselves to be in tune with the changing work environment. There are various courses offered on the iGOT platform and the courses and training programs conducted by the Department of Human Resources as well as National Academy of Direct Taxes and DOPT, which can be made use of. I am sure that we will work hard to deepen our knowledge and skills, which will be needed to undertake the responsibilities of the department in the next few decades. We as a department have undergone several changes and have re-engineered our business processes to keep the taxpayer as the center of our policies. Therefore, facilitating voluntary compliance is one of the most essential objectives of our tax policy. The department has taken several steps toward furthering this objective. By reposing trust in our taxpayers, framing objective rules, and easing compliance by putting in place technology-driven processes, we are encouraging our taxpayers to move forward towards voluntary compliance. We are also bringing about a change in the way we communicate and engage with our taxpayers. We are open to suggestions, open to feedback about our initiatives, and focus on expeditious redressal of grievances of taxpayers. A big step in this direction is the enactment of the Taxpayer Charter. Redressal of grievances is an important focus area of the department. In fact, we have dedicated May 2023 for attending to redressal of pending grievances in order to enhance our taxpayer services. I exhort all the officers and officials to take this work in right earnest so that the grievances can be addressed and resolved expeditiously. We have also given due importance to the welfare of our cadres by addressing both the human resource matters as well as the infrastructure requirements of our personnel. Due to concerted efforts, DPCs were held in a timely manner and officers were promoted to SAG grade in record 17 years. As a result of focused efforts, the department has been able to expedite the promotions at all the levels. The total number of promotions effected during the year 22-23 is more than 1700. Keen interest has also been taken in monitoring of gender related aspects in the department. A special emphasis was also given to finalize the infrastructure projects, which included inauguration of the new Central Revenue Quarters Nandanvanam at Chennai by the Honorable Finance Minister, strengthening the infrastructural facilities for the staff. Several approvals have also been accorded for purchase of land or construction of office building or allotment of office space, etc. I would also like to commend all the officers and officials of the department for having worked hard to make the special campaign 2.0 during Swachhata Abhiyan a resounding success. The Swachhata Abhiyan carried out under the special campaign 2.0 not only helped to clean up our offices but also aided in freeing up additional office space. The enthusiasm with which various activities were conducted by field formations across the country to observe Azadi Ka Amrit Mahotsav as also the iconic week of the Ministry of Finance is praiseworthy. I hope that we will continue to carry on the activities of Azadi Ka Amrit Mahotsav even in the current fiscal year. The contribution of the department in creating microforests as part of Harit Aikar initiative is also a laudable step towards environmental consciousness. The achievements of the department in the financial year 22-23 reflect the dedicated efforts of our officers and officials across the country. I also thank our taxpayers for their unstinted support to the department in its efforts towards contributing to the nation's growth. I hope that we will continue to honor and follow the vision for India at 2047 as outlined by our Honorable Prime Minister, exhorting all to strengthen good governance that is pro-people and proactive, especially when India is hosting the G20 presidency. Let us continue to put in our best efforts to make the new financial year 23-24 even more remarkable and strive to attain greater heights during Amrit Kal. Thank you. Jai Hind.